Our next guest says that jobs will decide the future of the housing market. Nicolas Retsinas is a senior lecturer in real estate at the Harvard Business School. He is also Harvard's director for housing studies. He is with us now from Providence. Nick, thanks so much for joining us this morning. You've said jobs will be key to a housing recovery. Is it going to take 1 year, 2 years? Is it going to take 5 years? Or is it just simply too hard to tell right now?
Well, it is too hard to tell. The housing market is struggling to find a bottom, struggling to stabilize, but it's having a hard time fighting its way through the foreclosures. You have latent demand for housing, but the foreclosures really stop it from reaching that bottom. What's going to get this market out of the doldrums is a recovery in terms of new jobs. How long that takes remains to be seen.
We do know that in some states the foreclosure data looks a little bit better, Nick, but I mean, does the government need to do more? Should there be sort of a larger sweeping support system to decrease foreclosures?
Well, the government's had a very ambitious program of loan modifications, and while it's helped hundreds of thousands of families, it's well short of the millions who are facing foreclosures. At this point, I think we have to get it through the pipe. The good news is incoming delinquencies have stabilized. So if we can get these foreclosures through the system, maybe by mid to third quarter next year, we should start to see some stabilization. But again, the question goes back to, will we produce jobs that will give people the confidence to enter that market?
Where do you see the biggest Achilles heel, Nick, right now in the housing market? I mean, if you look at single-family homes, multi-family homes, is there any category that is just still screaming out weakness? Well,
the single family is still struggling. As we have seen from the data you have reported, builders aren't building anymore. So we've got rid of that problem. The problem is foreclosures putting homes on the market and leading to lower and lower prices. There is a little bit of a silver lining, which is we are starting to see some strengthening in the multifamily. Rents are firming, concessions are ending, vacancy rates are down a tad. So that, I think, is evidence of some demand for housing, but the single-family market isn't in a position to respond yet.
What do you make of the mortgage market? Because, of course, if people can't afford their mortgage, I mean, rates are low. It's hard to imagine them going lower. Are these the right conditions? Is the Fed doing the right things for the housing market to recover?
Well, you're right. Interest rates are near historical lows, and I think it does give proof to the adage that interest rates alone aren't going to save the housing market. Indeed, the prognosis is probably increasing long-term rates in 2011. It goes back to the economic recovery. I think in the past, the housing market has brought the economy out of its recession. Today, I think the housing market will have to be dragged out of the recession by a growing economy. And looking at it as part of the big picture, is the Fed doing the right thing for the economy? Well, I think it is. I think it's very, very difficult. I think it's hard to overstate how deep a hole we were in. So I think we are starting to come out. It's just taking a long, long time to create those jobs. We're creating jobs now, but not enough to give a boost to the overall economy. Nick, we thank you so much for your time. Nick Retsinas joining us there. Thank you. He is a professor at Harvard. He was joining us there from Rhode Island.